Was this the real plan all along for the crypto crackdown? Well, the latest news from NASDAQ might actually hold a clue to this question. Also, one man's crippling Bitcoin addiction exposed, and of course the latest Ethereum and Polygon news. First, can Michael Saylor really get any more bullish on Bitcoin? Well, apparently yes. A banking crisis seems to be just the perfect advertisement for Bitcoin, and Michael Saylor, not missing a beat, is taking full advantage of what's going on with Bitcoin right now. In fact, MicroStrategy has announced that it paid off the remainder of its loan from Silvergate Capital and actually bought more Bitcoin. More Bitcoin. Come on, MicroStrategy, save some for everybody else, man. The loan payoff was made last week and totaled $161 million, which saw 34,619 Bitcoin get returned to MicroStrategy that were being held by Silvergate Capital as collateral. MicroStrategy was able to pay off the loan after raising $339.4 million this year via its at-the-market share sale program. So even after clearing out its debts, MicroStrategy was able to buy even more Bitcoin. MicroStrategy has spent another $150 million to buy 6,455 Bitcoin over the past 5 weeks at an average price of $23,238 per coin, which means that Michael Saylor is almost at break even now with an average price of $29,817. Now, this new batch of Bitcoin buys takes MicroStrategy's total holdings of Bitcoin up to 138,955. Yo! This guy is either a genius or totally insane. Or both. Both's possible, I guess. One thing is clear, Michael Saylor has a very clear and serious addiction problem. The dude is seriously addicted to stacking Bitcoin. One of us. Now let's talk about the Polygon news. Actually, ZK Sync news as well. You see, it's a new era for Ethereum as the first ZK EVM, zero knowledge proof Ethereum virtual machines, have been launched. The countdown has been on for Polygon's launch for some time, but another chain just kind of snuck in and beat them to the punch to become the first to do so. Matter Labs launched its zero knowledge proof Ethereum virtual machine enabled rollup called ZK Sync. Now, the layer 2 scaling network launched its ZK EVM on the Ethereum mainnet after 4 years of development. So these guys have been working at this for a damn long time. Now, this is designed to enable, of course, faster and cheaper transactions to help scale the Ethereum mainnet. ZK rollup technology has long been talked about as the golden grail of scaling. Ethereum dApps can now port over to the EVM quickly and easily with very minimal changes. The EVM went big with its launch as it was expected to go live with 32 to 50 projects on the platform, including some of the biggest names from the crypto space: Uniswap, SushiSwap, MakerDAO, Chainlink, Curve Finance, so all the big guys. ZK Sync won't be fully decentralized from the get-go though, which is actually an intentional move so the team were able to fix any kind of security or technical issues now that it's out there in the wild being hard tested. Polygon's ZK EVM has also launched on Ethereum's mainnet beta just 3 days behind Matter Labs. That means that the competition is heating up big time for scaling Ethereum. Now, Polygon's co-founder Nailwall has described ZK proofs as the holy grail of Ethereum scaling. Polygon's EVM is also a ZK rollup equivalent to the Ethereum virtual machine. The code of Polygon's ZK EVM is going to be fully open source through an APGLv3 license. This means that not only the current code, but all the future versions of the code are going to remain open source and can't be used for proprietary purposes. Polygon's ZK EVM also isn't fully decentralized yet either, so security, again, you're seeing coming first and foremost. Decentralization does remain the long-term vision for both Polygon ZK EVM and for ZK Sync, but they need to make sure everything works right first. Now, before we get into the big Ethereum and the big NASDAQ news, I wanted to let you know about my weekly newsletter. It's called Wealth Mastery. And look, I know how it goes. Life gets really damn busy sometimes. Job, wife, kids, all the other stuff, right? But you still want to stay up to date with what's happening in the cryptocurrency markets. You still want to find opportunities in the market. Well, that is why we made this newsletter. Every issue is packed full of altcoin alpha and airdrops and NFTs, technical analysis, tutorials, and more straight to your inbox twice a week. Join our 60,000 weekly readers by clicking the link down in the description. Oh, and did I mention that it's free? It's free, so check it out. Okay, now let's talk Ethereum. So MetaMask is proving that it is the place to be for Web3 adoption with its latest feature, sign in with Ethereum. It's here, it's happening. The wallet provider has added compatibility with EIP 4361, which is an Ethereum upgrade that supports the sign in with Ethereum feature. So the feature is a self-custodial alternative to the centralized world of Web 2, where we have, you know, sign in with Facebook, sign in with Google, all that stuff. This is using Web3 technology to allow you to access websites more securely. So with the sign in with Ethereum, MetaMask wallet users can then very securely authenticate web services with their cryptocurrency wallets. So supported websites are going to present users with a pop-up box, much like you would see anyway for other sign-in services, to be able to review the details. That includes the website's name, session details, and security measures. Now, the feature has been implemented in partnership with a company called Spruce, which is a digital identity and data provider. However, MetaMask isn't the first wallet to do this. No. That crown goes to Solana's wallet provider Phantom, which launched its equivalent feature on the Solana blockchain a few months ago. This is how the future of the internet is going to look and work, and it's going to be a much more secure experience. So I welcome the sign in with Ethereum or sign in with Solana features. Now let's talk about the NASDAQ and what might actually be behind all of these attacks that we're seeing on crypto. You see, the NASDAQ stock exchange, they're planning to launch their crypto custody services by the end of June. So they're finally getting big time into the crypto game. Now, those plans were first announced back in September 2022. Very interesting time in the market to announce such a thing, right? But now it's coming sooner rather than later, so very exciting to see it actually coming out to play. But NASDAQ, they're going to be dipping their toes into crypto custody services by launching, of course, just with Bitcoin and Ethereum first, like so many other services start off with. I'm sure we'll see loads of altcoins on there within a few years. NASDAQ following the footsteps of others like Fidelity, BNY Mellon, Black freaking Rock, right? This is going to be a massive move for institutional adoption, right? It's the freaking NASDAQ, man. But with the collapse of Silvergate and Signature, I can't help but wonder, was this the plan all along, to bring crypto under control of the big banks, the big players? Tin foil hat thoughts here, guys. The USA, they don't want to kill crypto, man. They're happy to let Wall Street use the crypto to transfer wealth from you over to them. But the USA does not like all these different companies, all these different technologies out there being allowed to provide services to people. They're giving too much freedom to people. You can't have that. They can't control Bitcoin either, which drives them crazy. It's a direct threat to the dollar-led international order. You can't implement sanctions and all this other stuff if you have Bitcoin. Just think about it. Think about it. BlackRock launched their Bitcoin fund a few months back. Fidelity just launched Bitcoin and Ethereum trading for retail traders. All the crypto banks got shut down around the same time. There wasn't even a reason to shut Signature Bank down. They just did it because. And now crypto companies are forced to bank with JP Morgan, the preferred bank of Satan. Now NASDAQ getting into the game as well. What if all these lawsuits against Kraken and Coinbase and BINANCE, they're just a massive power grab? I mean, the power Wall Street has over the regulators is unprecedented. And it's all just going to be funneling money and power back to the biggest players in finance. People like JP Morgan, BlackRock, they're the winners of this. And let's go even deeper. What if FTX, what if it wasn't a mistake? What if it was an inside job designed to provide just the exact justification to take down half the crypto industry and hand all the power over to Wall Street's most powerful players, the JP Morgans, the Goldman Sachs, the BlackRocks, the Fidelities, the NASDAQs. Well, at the same time, they roll out dystopian CBDCs, right? Central bank digital currencies that will just be a nightmare. Remember, a lot of people stand to lose or gain incredible sums of money depending on the outcomes of all these legal cases that we're seeing in the United States right now. We know who stands to benefit, we know who stands to lose. I mean, think of it like this. Knowing everything we know about how downright Machiavellian and evil and criminal the big banks are, would you actually be surprised by any of this? If this is actually what is happening, a massive power grab to take control of crypto and to tame the industry so that they can benefit. Okay, that's it. Subscribe now. I'll see you next time.